The Philippines is witnessing an intriguing phenomenon. Russian billionaires, once fixtures in Western capitals, are increasingly choosing this Southeast Asian nation as their new home. This unexpected migration is raising eyebrows and prompting questions about the forces driving this shift. The Philippines might seem like an unusual choice at first glance. However, a deeper look reveals a confluence of factors that make it increasingly attractive to those seeking a haven for their wealth and a base for new ventures. The country's warm climate, beautiful beaches, and welcoming culture are just the tip of the iceberg. Underneath lies a strategic location, a business-friendly environment, and a web of historical and diplomatic ties that have made the Philippines an increasingly attractive destination for Russian capital. This influx of wealth and influence is rapidly changing the landscape of the Philippine economy and society, creating both opportunities and challenges for the nation. The exodus of Russian billionaires from the West is not a sudden whim, but rather a calculated response to a series of events that have reshaped the geopolitical landscape. The conflict in Eastern Europe has cast a long shadow, leading to unprecedented sanctions and financial restrictions targeting Russia's elite. Once welcoming havens like London, Switzerland, and Monaco have become increasingly hostile territory for Russian wealth. Billions of dollars in assets have been frozen, luxurious yachts seized, and bank accounts locked down, creating a financial and political quagmire for those caught in the crosshairs. This aggressive stance by Western governments has left many Russian billionaires feeling unwelcome and vulnerable, prompting them to seek safer shores for their fortunes. The traditional safe havens have, in their eyes, become unreliable, even dangerous. This has spurred a global search for alternative destinations, countries with stable governments, attractive investment climates, and a less adversarial stance towards Russian interests. And the Philippines, with its unique blend of economic potential and political pragmatism, has emerged as a frontrunner in this race for capital. The Philippines presents a compelling case for those seeking a new base of operations. The government has long pursued investment-friendly policies, welcoming foreign capital across various sectors. This open-door approach stands in stark contrast to the increasingly restrictive measures being implemented in the West. Beyond its welcoming stance towards foreign investment, the Philippines boasts a strategic geographic location. Situated at the crossroads of major shipping lanes, it offers unparalleled access to Asian markets, a key consideration for investors seeking to diversify and expand their portfolios. Furthermore, the Philippines offers a range of residency programs tailored to high net worth individuals. The Special Resident Retirees Visa, for instance, provides a pathway to long-term residency with minimal investment requirements, making it an attractive option for those seeking a permanent foothold in the region. This combination of factors, a welcoming investment climate, strategic location, and flexible residency options, has made the Philippines an increasingly attractive destination for Russian billionaires seeking a stable and profitable base for their assets and operations. The appeal of the Philippines extends beyond its strategic advantages. The country boasts a high quality of life at a relatively low cost, a major draw for those accustomed to the exorbitant expenses of global financial hubs. Luxury real estate, often a key indicator of billionaire activity, is remarkably affordable compared to cities like London or New York. Adding to its allure, the Philippines offers a range of tax incentives designed to attract foreign investment. The Philippine Economic Zone Authority, for example, provides tax holidays, duty-free imports, and streamlined business regulations for companies operating within designated economic zones. This favorable tax environment, coupled with a relatively relaxed regulatory environment compared to traditional financial centers, has made the Philippines an even more attractive proposition for Russian billionaires seeking to optimize their financial positions. Moreover, the Philippines enjoys strong diplomatic ties with Russia, fostering a sense of goodwill and mutual understanding. This political alignment provides an added layer of comfort for Russian investors, assuring them of a predictable and potentially supportive operating environment. In contrast to the suspicion and scrutiny they face in the West, Russian investors in the Philippines find a government eager to court their investments and integrate them into the local economy. Section 5. Where money flows. The influx of Russian wealth is already reshaping the Philippine economic landscape. Luxury real estate in prime locations like Manila, Palawan, and Cebu is being snapped up at a rapid pace, driving up property values and transforming these once sleepy destinations into hotspots for the ultra-wealthy. Beyond real estate, Russian billionaires are investing heavily in key sectors of the Philippine economy. Renewable energy projects, particularly solar and wind farms, are attracting significant Russian capital, aligning with the Philippines' push for sustainable development. Infrastructure projects, too, are receiving a boost from Russian investment, with public-private partnerships emerging as a preferred model for financing the construction of new roads, bridges, and other essential infrastructure. This influx of capital is helping to address the Philippines' infrastructure gap, a critical bottleneck to sustained economic growth. Section 6. A rising tide. This surge in Russian investment presents both opportunities and challenges for the Philippines. On the one hand, the influx of capital has the potential to boost economic growth, create jobs, and elevate the Philippines' standing as a regional economic player. The construction boom fueled by Russian investment, for example, is creating jobs and stimulating demand for local materials and services. Investments in renewable energy are not only reducing the Philippines' reliance on fossil fuels, but also positioning the country as a leader in sustainable development, attracting further investment and enhancing its global reputation. However, this influx of wealth also raises concerns about potential economic dependence and the potential for market distortions. The rapid rise in property values, while a boon for some, is pushing homeownership further out of reach for many Filipinos, exacerbating existing inequalities. Section 7. The Pandora Papers Parallel. The arrival of Russian wealth in the Philippines inevitably raises questions about transparency and accountability. The 2021 Pandora Papers leak, which exposed the hidden offshore dealings of numerous global elites, including many Russians, serves as a stark reminder of the potential for illicit financial flows to be masked as legitimate investment. While there is no evidence to suggest that all, or even most, Russian investments in the Philippines are linked to illicit activities, the potential for such flows cannot be ignored. The Philippines, with its historically strong banking secrecy laws, could inadvertently become a haven for ill-gotten gains seeking a safe harbor. This presents a significant challenge for the Philippine government, which must strike a delicate balance between attracting foreign investment and safeguarding the integrity of its financial system. Strengthening anti-money laundering measures, enhancing financial transparency, and promoting responsible investment practices will be crucial to mitigate the risks associated with this influx of wealth. Section 8. A calculated risk. The Philippine government's embrace of Russian investment can be seen as a calculated risk, a strategic gamble to accelerate economic development and enhance its geopolitical standing. By positioning itself as a welcoming destination for Russian capital at a time when other countries are closing their doors, the Philippines is seeking to secure a first-mover advantage, attracting not just Russian money, but also the attention of other investors seeking stability and opportunity. This strategy, however, is not without its critics. Some argue that the potential economic benefits are outweighed by the risks of becoming overly reliant on a single source of foreign investment, particularly one that comes with geopolitical baggage. Others express concerns about the potential erosion of democratic institutions and the rule of law if the influence of wealthy and politically connected individuals goes unchecked. The challenge for the Philippines will be to manage this influx of wealth in a way that benefits its citizens while safeguarding its long-term interests. Transparency, accountability, and a commitment to the rule of law will be paramount in ensuring that this new wave of investment does not come at the expense of the very values that make the Philippines an attractive destination in the first place. Section 9. A New Dawn. The influx of Russian billionaires into the Philippines represents a fascinating case study in the shifting dynamics of global wealth and power. It reflects the enduring allure of havens, places perceived as safe, stable, and welcoming to foreign capital. It also highlights the growing tension between a globalized financial system and the efforts of nation-states to assert control over their economic destinies. Whether this influx of wealth will ultimately prove to be a boon or a bane for the Philippines remains to be seen. The outcome will depend on a complex interplay of factors, including the Philippine government's ability to manage this new reality effectively, the long-term strategic goals of Russian investors, and the evolving geopolitical landscape. One thing is certain, the Philippines is at a crossroads, presented with both a unique opportunity and a significant challenge. How it navigates this uncertain terrain will have profound implications, not only for its own future but also for the future of global capital flows in an increasingly interconnected and volatile world.